conducted more than 181 webinars over last 4.5 years. Since Corona has given this opportunity to us to interact with all of you, so over 1,25,000 participants has registered for these programs, and our journey of knowledge sharing is continually going on without any break. Friends, our every time our focus is that what is new is coming should be communicated to the industry, and what is new proposed, and they are asking comments and suggestions, and this is the right time to suggest. And sometimes what is happening, there is a confusion in the market relating to various aspects of various subjects. We want to clear that doubts. As you are aware that SEBI wide ICDR regulation 22 mandated and disclosed the key performance indicator that's called KPIs in the offer document under the head of basis for issue price. As you can understand, in SEBI's point of view, they have opened up the pricing. Now, there is no pricing restriction to any company. But what SEBI wants, they want disclosure. So their disclosure is always, they emphasize on this, that you give disclosure and you give perfect disclosure. And simultaneously, they are improving continuously the disclosure aspects, and KPI is also one of the factor to give the indication to the investor when they are investing, they can understand. So these disclosure include traditional financial parameter ratio in financial parameters and ratios. In the basis of issue price supplemented with disclosure of various non-traditional parameter. Now, you must understand there are two types of parameter. One is they are financial parameter, and second is non-financial parameter. And in the financial parameter, there are two aspects. One is the financial information, and second is the ratios on the basis of various financial parameters. So you can see companies' ratio, understanding their point of view, and move on. And in the non-traditional, non-financial ratio, the market is, so the information is very wide open, that whatever, because there are two types of things. One is you have a industry which is working on this, which is commonly known. And sometimes what is happening, you have some industry which is new age, which we call new age. And what is happening in new aspects are all coming, that you have a, now SEBI is allowed that even if you have a loss, you can bring out your issue. So we have divided all these companies into 4 parameters. One is the financial information and ratios of traditional company and new age company. So in the financial company, traditional company which has profit making, these financial information and ratios are important. You can get their denominator and you can display it also. But sometime in the companies in loss, and the SEBI allows, you can bring out the loss making company also, but you give information and disclosure. That particular time the issue comes that how to calculate these financial parameters, that is not possible. And that's why in these companies which are loss making, the non-financial parameter becoming a very, very important. So today we will all discuss, because in the fast changing market dynamics, new practices are evolving, and in respect of disclosure of KPIs, particularly in respect of non-traditional financial companies, which are often loss-making but seek fund to the prime on the premise of future potential. So for that, you understand non-financial issues, how much, like a hotel company, like a travel company. So you can just see that how much people can come, how much people are coming, what is the public interest in this. So various non-financial parameters are required. Now, today's objective of this webinar is to deliberate the problem or dilemma being faced by issuer companies as well as the merchant banker, and in disclosing the various KPIs in IPO offer document. And simultaneously, we will deliberate also the information needed of institutional and non-institutional investor due to diversity in their disclosure parameter and practices. Because one is the issuer and the merchant banker, another is whatever information you are giving, it is going to the investor. So investor may be mutual fund, investor may be retail, investor may be high net worth individual, investor may be mutual fund, and investment banker. Various other people are there. So they should know what are the information, whether this information is okay or not. So today, the key discussion point of this webinar is identify a definition and classification of key parameter financial performance indicator, format and presentation of KPIs, problem being faced by issuer company and merchant bankers, information need of institutional and non-institutional investor for taking investment decision. Today we have invited galaxy of expert with us, and it is my pleasure to extend a very warm welcome to all my speakers for this webinar. So I will just introduce. First, we have Mr. Akshay Bhandari. He is Executive Director in DAM Capital Advisor Limited. He has 20 years of experience in part of the investment banking team in ECM and corporate finance, handling a fundraising for corporate through IPOs, InvIT, QIP. He worked closely on various aspects of InvIT and was the lead in the regulatory and implementation aspects of InvIT. So Akshay will help us when they are investing or when they are advising companies as a merchant banker, what issue and what problems they are facing. Because the object of the program is that this KPI should be effective. KPI for the companies also, it should be, a company can also give the best disclosure, so there should not be any confusion. And simultaneously, investors should also understand, and they should not miss out anything. Then come to, so I welcome Akshay for this program. Then come to Darpan Batra. Darpan is a company secretary and compliance officer of Yatra Online Limited, and they also came out with their IPO issue. And Darpan is an experienced management professional for the last 20 years of experience in corporate affairs, legal function, known for his strong deliverables. His expert including compliance management, corporate governance, NASDAQ listing, work with India and US securities regulator, fundraising, project financing, merger and acquisition, and handling shareholders and other litigation matter. I welcome Darpan. You as a issuer company will guide us that when your issue came, what problem you have faced, how you have overcome this, and what suggestion you want to give to change this. So welcome, Darpan. Then we have Nitin Gosar, is a fund manager, equities in Bank of India investment manager. He has 18 years of experience. Before joining Bank of India, he was fund manager at Invesco Asset Management India Private Limited. I welcome Nitin, and your expertise as a mutual fund when you invest in the company, or invest in IPO, or invest in any type of companies, how the KPI is helpful and what are the missing area, and how these area can be given better results and better disclosure, we will understand from you. Then we have a Sanjeev Singhal. He's a Central Council member of Institute of Chartered Accountant. He worked closely with various industry associations, including CIA, FICCI as a government nominee of National Advisory Board on accounting standard. He contributed to the development of equity accounting standard and implementation guide while ensuring that industry interests were also protected. As a chairman of Accounting and Auditing Standard Board of ICDR, he lead the development of the technical guide of disclosure and reporting of KPI in offer document. So Sanjeev Singhal is one of the very academic-oriented professional, very successful professional, and his experience and work which he has done in Chartered Accountant Institute will help us on the technical aspects that why this. So I welcome Sandeep Singhal. He is joining shortly. He has a meeting and he will join. Then we have Mr. Bipin Agarwal. He is a Managing Director of Merchant Banking Division at Narnolia Financial Services Limited. He has a 27 years of experience and a long-standing track record in handling diverse investment products. He is a specialist in equity research, real estate finance, marketing, fundraising, and building sustainable relationship. So I welcome Bipinji, and he will also tell that what are the importance of the KPI, and as a merchant banker, what problem they are facing when they have to give the information, whether it's a complete or it's not complete, or how to make the peer review, peer comparison, and if the company is new age company and there's no peer, then how to do this. So I welcome Vipin Agrawalji for this program. Then we have a Manoj Kumar, partner, head, M&A and transition corporate profession. I welcome Manoj for this program. And we have Ruchika Sharma, associate partner, and Anjali Agrawal, partner, corporate profession. They will also share their views. So, friends, I welcome all these dignitaries, those who are here. And then, interestingly, one is from the company, issuer company's person. One is mutual from the mutual fund. Two are merchant banker, and other people are other merchant bankers. So there are 3-4 merchant banker professionals also. When they design prospectus, they can tell us what they see. So, friends, as a different practices for presenting KPI in offer document are being noticed, so we have done an analysis and we have identified that divided company into 4 parts, and then we saw the company, the uniformity. We found that every company is giving different types of information. For them, it is a KPI. For others, it's not a KPI. But the purpose of showing KPI in issue price is not fulfilling until unless you cannot compare apple to apple, or you cannot compare things in a structured manner. So this is the problem which everybody is facing: issuer company, merchant banker, investor, and other, that how to decide what is a KPI. Further, we will also try to understand how can we classify and financial and non-financial measures in KPI. From an investor point of view, we will try to understand what they look for in the KPI when considering an investment in IPO, how they track KPI after making an investment, and how they evaluate KPIs when different industries have a varying practice for presenting them. So traditional industries, normal industries are okay, but when issue is coming for the new days industry, and that is also not comparable, that is another challenge, how to go give the KPIs. Apart from this, we will understand that all information should be provided for each KPI and how best it can be presented, how they decide peer companies for showing comparison of KPI, and what if they are not companies with similar business object. In respect of information provided by companies to private equity, whether all the information should be shared by the issuer companies in the offer document, or only selective relevant information they should give. Because what is happening, all these companies which are going for IPO, many companies are taking the fee fund and they are giving exit also. And if they are not giving exit to P, their P is there, but they are getting money when they are unlisted. So that time they are giving various information. So the question is, the information which they have given to P, is they disclosing to the investor and offer document or not? That we will discuss. In respect of audit committee of issuer company, what information should be placed before the audit committee to seek the approval? Because a management role, management give to the audit committee finalize on the basis of what management gives. So this cycle is going on. The management is making KPIs with the help of merchant banker and then presenting to the audit committee. Audit committee is finalizing whatever you are giving. So the question is whether you are giving complete or it is not complete. So today we will try to solve this problem by the expert views for our experts, those who are there. So before starting our session, I will just tell you what will be the structure. The structure of our program will be like this, that we have shared the questions to all our dignitaries. First, we will take the issuer companies, and then we'll ask from the merchant banker, and then we'll ask the mutual fund and investors, and then we'll ask the Sanjeev Singhal, the chartered accountant, the professional point of view on this. So this is all we want to discuss. But I just want to make one announcement. We are doing webinars every week, Friday, 4 o'clock, 4 to 6. So I just want to announce our next webinar, that is 183 webinar. will be on unlocking the value through demerger and hive ops. So we have done various program on merger, unlocking the value of merger, but this time we are specifically focusing on demerger, and we will identify that how the demerger will help to the companies to create a value, or or they are not able to create value for the investor. It's a value destruction. So we will discuss how it is useful and how the company can take maximum advantage on various things. So over to you. Now I will request first Darpan to tell us, as a merchant, as a issuer company, because your Yatra's issue has come, and interestingly, the DAM Capital was their merchant banker, and they are also here. So, what question we are asking? What issue problem are being faced while drafting KPI in the offer document? So, Darpan, you start this. My first question to you. First, you give your 2-3 minutes overview.
Sure.
And
sure.
the question which I will ask, you can give. And simultaneously, the merchant banker Akshay Bhandari and Vipin Agrawal and other people can also, and Manoj can give the same answer. So first thing, you give your views, general views on KPI, which
Sure.
we are.
Sure.
Yeah.
No, absolutely. Thank you. First of all, thanks for inviting me here and putting a kind of an elaborated agenda and perspective in view for each one of us, and so that we are able to make this session useful for all the attendees here. So that'll be, I think, an effort of all and everyone out here, and like mine as well. So my view on the KPIs is like this. KPIs are normally or something which have been recently introduced by SEBI. I think these were laid down in the first quarter of around January and February of 2022, and primarily were targeting a companies or like ours, which is a kind of a new age tech companies, which are primarily not relying upon the certain financial ratios and figures when it comes to that, what kind of profitability and what kind of measures, how are you actually being measured in terms of the profitability in the market when you're actually trying in your attempts to hitting the market, the primary market for for accessing the funds, right? So to that extent, that becomes, or that is something which has been a non-traditional. And in my view, primarily and generally, I would think that for a KPI to be relevant, it has to be substantiated by an appropriate set of data. Though, of course, there could be a KPI which could be a qualitative versus quantitative. But I would think that for KPI to remain relevant amongst all the shareholders, it has to be substantiated by the data, primarily the financial data, and also that should also be should be able to be benchmarked itself against its peers and other companies in the market. So my view in the KPI is that it's a welcome measure which has been introduced by SEBI, because in that scenario you are able to see through that what kind of performance measures a company can itself judge on. And since it is coming from the company itself, then it makes it more relevant that how should that company be judged, right, over a period of time. It should actually also be laying down a scenario for that to be relevant. It should not only be seen and proven in terms of a trend based upon the historical, from a historical perspective. It should remain relevant for a future perspective also, so that people are able to see through and gauge the performance, in the from the historical, from the historical trends, as well as they are able to gauge it from the futuristic trends as well. So that's the kind of a overview and thought I have so far as the KPIs are concerned. More than happy to answer, any questions or anything if I can help on. Anything, any questions?
Hello.
I can help on, Manoj?
Hello, sir.
Yeah.
I think
Darpan, I will ask you a question. First, I'll just request Akshay Bhandari
Sure.
and Vipin Agrawal. Yeah,
Absolutely.
Akshay. So, what is just 2-3 minutes? You can just tell about the overview of the KPI. Then I will specific questions will I'll ask, so all the people can give answer.
Sure. Thanks everyone for this opportunity. What I'll do is I'll just share my screen
Yeah.
and I'll just lay down certain key thoughts which are there on KPI. So
Yeah.
that would be helpful for everyone over here. So, conceptually, this whole angle of KPIs was brought in by SEBI, as Darpan rightly said, primarily for new age companies, but now it's made applicable to all kinds of companies, and it's part of SEBI regulations itself. So, what is there on the screen right now is that what are the disclosure requirements? One is identification of these KPIs. How do you identify? How do you select a few KPIs, and how do you ignore certain KPIs? What do you call as KPIs? Then the second aspect is that what all do you disclose in this, and where all do you do the disclosure? So and how do you internally approve it? So the way SEBI has asked is that obviously first the company identifies the KPIs, then it goes to the audit committee for approval. Audit committee will take a note of all the KPIs, and this is based on certain aspects, which is what are the historical KPIs which the company is tracking. So generally, as a merchant banker, the question to the issuer is, what do you track internally to ensure and to check whether the company is running in a healthy position or no? Not just financial parameters, but mainly non-financial parameters. Because financial parameters all come up from the financial statements, be it your general stuff like, gross margin, EBITDA margin, PAT margin. But what is more relevant is industry specific data points for the corporate, that what are they tracking. And also what SEBI has asked is that if you have disclosed these, if you disclose certain set of data points, whether you call it KPI or you don't call it KPI, if you've disclosed it to investors in the last 3 years, then by default that is considered as a KPI, and you'll have to ensure that the same set of numbers are disclosed to the public in an IPO situation. When you're going public, you disclose all these details, not just for at the time of DRSP filing, but ideally every quarter, or if not in every quarter, then at least once per year, and till the time the entire funds are used. But the expectation from we have dignitaries from the mutual fund industry also over here, they'll confirm that the expectation is the moment company starts disclosing KPIs, the expectation is to give it every quarter, track it quarter on quarter basis, and also on an annual basis. So this is broadly how it has gone as regards disclosure of KPIs in the offer document. So there's a specific chapter called as basis for offer price, where they want you to give all the KPIs all included in one place. Simultaneously, there's a separate section called as industry section, where they want you to compare your KPIs with the publicly available KPIs of all other listed players. So people who are already listed in the space for quite some time, generally data for them might be available, might not be available, because they were not listed in the current IPO regime. So they would keep on disclosing KPIs basis their understanding to the extent they are comfortable. But for companies who are going public now in the current regime, SEBI is also tracking very closely. Even during when SEBI is giving observations, they'll come back and say that, your peers who have just done a IPO recently have shown XYZ as a KPI. Why are you not considering this as a KPI? So that is also one big challenge, where you need to go back and explain that why our company is different vis-a-vis the other company, and why this disclosure is not available.
Okay. Okay. Mr. Bipin Agrawal, your view. Acha, in the meantime, I'll just request. Yeah, Bipin ji.
Yeah, Pavan, I'm here. So
Hmm.
I think Akshay covered it all very nicely and almost have encompassed everything that is required. Essentially, introduction of KPIs in assessing a company's IPO ability has been done, which everybody knows is that, whenever generally IPO comes, it generally strikes with bullish sentiments in the market. And, following that, a lot of companies start coming, in which all kinds of company tend to come. and raise money capital from the public. And whereas the basic thought behind SEBI's moves is that not all public is fully capable to understand deep, do a deep analysis of the company or the data which is available prior to the, filing of an IPO. So SEBI on its own wants almost all kind of KPIs, right? Which is sometimes, a lot of times, mainly theoretical in nature as well, right? So, but then obviously they don't want to take a chance. They want companies to cover almost all kind of KPIs, disclose information in it, and then let public make a wise choice if they have to. So,
Okay.
and in a lot of companies, as Akshay said, whatever company is already disclosing, if it is a private equity funded company or already there are investors, they would want what you have been disclosed to earlier investors, you should be able to disclose to the small investors also through the prospectus, because no variance of information should be there. Disclosure of the information should be there, right? So that's one main reason to do that.
Okay.
I think these are the key points. It's the intent that is more important.
Okay. Okay. So now I will just changing track. Mr. Sanjeev Singhal, he is in a meeting, but he has come for the program. So I'm just requesting him, because he was instrumental to draft the CA Institute guideline on KPI, and he has a deep knowledge on the subject, not only the academic side but practical side also, as a practitioner also. So I just want to take his view, because I wanted to ask various questions. So because he has to go, so I'm just requesting Sanjeev Singhal to just tell us the 2-3 things are there which you can suggest. KPI, that what you think when you were designing and drafting, but simultaneously you also tell us that current definition is provided by KPI in the CA Institute guidelines is required to change, because so many new companies are coming. How we can classify financial measures in KPI and non-financial measures, and what, because when you are making something and when this is implementable, then what are the issues you are facing, and do you think that this is a time to change this? So over to you, Sanjeev ji, because I know I was interested to ask you one by one question, but I have bombarded all the questions, so you can just give answer and then you can attend your meeting. Yes, Mr.
Thank you, Pawanji. Thank you, Pawanji. It's always a pleasure, to accept your invitation. As you rightly said, I am at the T Hub at Hyderabad with our rank holders of this time CA finalist. So in this KPI, when this technical guide was developed by the Institute of Chartered Accountants of India, Security Exchange Board of India have approached us saying that we need the auditors or the independent chartered accountant certification on the same. And there was a lot of debate. There were all the stakeholders who participated in these meetings, and we were really trying to find out a way through which these numbers or these KPIs can be an assurance can be given. Because for giving an assurance, what is required is that these are verifiable, these are measurable, and these are auditable, or if these are coming from the audited books of accounts. Now, the non-financial measures are not coming from the audited books of accounts, and the definition for them could vary. For example, if we say the number of orders received for a food delivery provider. Now, the number of orders received is the number of orders received, or the number of orders executed, or the number of orders for which fee was received. So there could be different measures. So our endeavor was that to standardize it. That's why the definition that was provided was the numerical measure. KPI should represent a numerical measure. And if there could be some standard definition, for example, if we say gross merchandise value or net merchandise value in case of any e-commerce, so that should be verifiable, and that should be something which everybody would interpret it in the same manner and same fashion. For example, today when we say revenue is defined by, say, the IFRS 15, or when we say AS9 or AS7. So there's a definition of revenue. Similarly, if we have the definitions of these KPIs, or at least the broad indicator, so that the interpretations cannot go haywire, and the stakeholders, can really understand that on what basis this valuation is being derived at. That is more important. So as far as this guide is concerned, this guide was made it's less than 2 years ago, and that was in the light of the new age tech companies. If it is required to undergo change, it can. But only thing is that we have to keep the basic principles in mind, that the information should be verifiable, measurable, and auditable. That's what I would like to say, Vijayji. If you have one or two quick questions, I can answer. But otherwise, I would like to take your lead. Thank you. Vijayji, you are on mute.
Okay. The CA Institute has given a definition of KPI. So do you think that definition is fulfilling today's need, the way things are changing, or you should think that there should be modification in this?
So, Pavanji, from the time it was brought to our notice, things have not changed. It has not been brought to us that there is a need for change. If it is indicated, then again this expert group can meet and we can review, because this was a joint project of SEBI as well as the Institute of Chartered Accountant of India. Merchant bankers were also involved, and the experienced auditors were also involved. If a need is felt, we can have a relook at this.
Okay. Now, just tell me, financial information, financial ratios you can create and you can have the information. But non-financial ratio is not final. Non-financial information is not finalized that what you will disclose. So do you think that for loss-making companies, the non-financial information is overtaking the financial information, because you can't give, which is not comparable, and you can't give ratios also because there's no denominator in this. So do you think that non-financial information, how to do it and how to make this a part of system? What is your view on this?
So first of all, Pavanji, the finances will always continue to dominate. Loss-making company, if it always remains in losses, is not going to give anything to the stakeholders. So to my mind, financial, and now as far as the ratios are concerned, they are defined in the CARO also. They're defined in the guidance note, so there is no issue. But for the loss-making company, I will not say non-financial parameter, I'll say operational parameter, because now non-financial information is construed more of an ESG or sustainability information. But if the operational parameters are concerned, the guide talks about the operational parameter. What are the parameters on which an independent chartered accountant can give an assurance, and what are the parameters on which it cannot give an assurance? And why we said that it cannot give an assurance? Because there was no standardized terminology to define these. If these can be defined in the ICDR by SEBI, then of course our members will not have a problem in giving an assurance around the same. But a standardization is required. Otherwise, what is the benchmark against which the auditors will be giving an assurance?
Okay. And do you think that you have mentioned that there are so many information, so now the time has come giving information in plenty of in number, we should identify the negative KPI also, that this is not required? Because what is happening, the companies tend to give multiple information. You can give and you can show that I have given 50 information, but that is not required. So is there a time that we should also define that these are the negative KPIs should not be disclosed?
We can think of, or we can say that these are the KPIs on the basis of which valuation has not been arrived at. So clearly demarcating that these are the KPIs for which form the basis of valuation, and that's all.
Okay. And as a chart now the question is, as a chartered accountant, you have to issue a certificate also, and then your certificate is going to the audit committee. So what, as a chartered accountant, you are seeing to issue a certificate?
Yeah. So first of all, we have talked about the concept of a risk control matrix in this technical guide, that there should be internal control over this reporting on the KPIs, which the management should develop, audit committee should bless it, and management testing should be done. Once that has been done, my job will be to look at that how these have been defined, what kind of information is available, what kind of evidence I can draw upon to do a test verification and for issuing of my report. If I'm not satisfied, if there are any limitation on information, the information is not verifiable, or there could be multiple interpretations for the same, I will mention the same in my report.
Okay, okay. So Sanjeev ji, thank you very much.
Thank you.
I will be, we will be loved that you should continue, but whenever you require, you can drop out. And I know you have taken time and come. Thank you very much.
Thank you so much. Thank you.
Okay, so Nitin, you are a mutual fund manager. Please tell me, what is the importance of KPI in your decision making? When you
Yeah,
then Manoj, you have to
yeah,
speak. Yeah.
yeah. Thanks for the question and thanks for inviting on this professional forum. You're right. KPIs, the way they have evolved, they have helped us a lot. To put a perspective to this topic, KPI. The whole purpose of KPI is to provide a common lens, which can help us to understand companies better. Uh, and this common lens has been is a, you can say, a book or a matrix which is also being used by the management who is internal to the company, and that same lens can be used for the external, which is the investor who are looking to participate in that company. So there is a common ground derived with this common lens through which we can evaluate the company. Uh, Typically, when we talk about KPIs can be broken down into two aspects. One is health of the company, and second is, what are the drivers or the unique metrics in snapshot which are going to help the company. I'm sure because most of you are from, all of you are from the CA background, so you understand the PNL and the balance sheet part. But just to be on the same page, when we talk about health of the company, we do talk about the business breakup or the revenue, EBITDA, profit, ROC, cash flows. But when we talk about the drivers and the unit metrics, that is where the changes happen. There are companies whose drivers are totally different from A versus B or B versus C, and one needs to understand the driver. So when we talk about unit metrics or driver, we talk about our company able to bifurcate it in a more simpler way, which we as an investor can understand, like revenue per ton or revenue per hospital bed or probably revenue per customer, per store, per square feet, and similarly with profit or capital expenditure per store, per hospital bed, per customer. So that is how basically KPI are supposed to, they they are enabler to an investor to help understand the companies in a better way, the way management wants to look at that company.
Okay. Okay. Manoj, your view
Yeah. So
as a merchant banker, what you think?
good afternoon, everyone. So the key performance indicators, as the term itself suggests, is very important for any decision, any investment decision for any company, and hence SEBI has first brought this concept into in the February 2022 through a concept paper. Later on, it was inserted in the chapter 6 of the ICDR regulation, and now it is mandatory part of the offer documents for any public issue. So the financial parameters were already being disclosed in all the cases in even in the past, but the non-financial parameters, which is mainly the operational parameters, which are very important and which helps the decision making, the operational growth of the company, operational metrics through which it can be compared with other peers, it has become very important for any decision making, and hence this guidance is very important. And there may be a lot of confusions also, which of the KPIs should be included, which should not be included. But broader guidelines as given by SEBI is very much clear that it should be consistent, clear, measurable. Uh, it should be precisely defined. It should not be misleading and can be certified. So there will be certification by an external party, which may be a statutory auditor or practicing chartered accountant or cost accountant, which is peer reviewed. So they have to test it, and they should verify it and give their opinion as an expert. And then this KPIs which are selected to be disclosed in the offer document are to be placed before the audit committee of the company, which is going to be listed. And they will obviously, audit committee should consist of the persons who have the knowledge of the finance, and they understand the business of the company. And based on that, they will take a decision that these KPIs are good indicator of the business of the company and should be included in the offer document. Then SEBI has also guided that this, whatever you are disclosing in the offer document, should continue to be disclosed at least for 1 year, even after the IPO, or till entire proceeds of the issue are utilized or invested or utilized by the company. So these are the broader guidelines, and the guidelines are very much clear. Obviously, there may be difficulty in certain class of companies which are not comparable. There is no comparable in companies in the market. So how to benchmark it, that may be a big challenge. Then there may be companies which have unique kind of business, and they want to display their performance based on certain other parameters which are not being generally used by even the industry peers. So in all such cases, obviously SEBI would keep asking questions from the lead manager and the issuer company, why they have put those KPIs and why not other KPIs which are being given by other similar kind of companies. So those to and fro comes, and based on that, final list of KPIs are finalized and given in the final offer documents. So I think the process is very much clear. Yes, there may be challenges for new age companies, startups, etc., but it will continue, and it is evolving continuously.
Okay. Thank you, Manoj. Thank you very much. So friends, now the matter is clear. Now we are coming to the specific issues. So first, I want to cover issuer company and merchant bankers, because they are designing and drafting. Then I will go to the mutual fund and investors. Okay. So Nitin, I will ask you after them, but in the manner which I'm asking question to the issuer company and merchant banker, if you have any point, you just raise your hand so I can ask you also. So Darpan, you have come out the issue. So what issue problem are being faced while drafting KPI in offer document when you have come out? And Akshay, you also suggest, because you were also merchant banker of Yatra. So both the things. So first, Darpan, your view.
Sure. Thank you. So my point is that, look, so far as the KPIs are concerned, these are comparatively kind of a non-traditional measures. And when we were just actually opening for the IPO, this was probably we were one of the issuers who were to face this issue that, you have to mention the KPIs, right? And at that point of time, we were just thinking what kind of KPIs we could actually include, from which could be different from the traditional measures of, seeing or observing the company on that kind of a platform, like profitability ratio or gross profit booking, etc., right? So we had a kind of a kind of a safe zone, because we had been listed at Nasdaq for some time, and various of our parameters so far as the performance indicators were there in the public domain, so we could actually pick up to that extent, right? But if I say talk generally, because these are the non-traditional measures, any other company would face that kind of an issue, because if you are not able to reason out or see the performance of the company in that particular criteria. Can you guys hear me?
Yes, sir. Yeah.
Okay, perfect. So
carry on.
Perfect, great. So if you are not able to see yourself through on that kind of a criteria, you'll not be able to justify yourself. The another important point for us was that, look, we were to be benchmarked. And so far as India is concerned, I think we had only 1 or 2 companies in the travel domain. Rather, if we talk about on our kind of landscape, only 1 company which was there. So which company would we actually just pick so that it becomes become a comparable option as well for us? So these were the kind of issues which we were facing when we were just looking to have our KPI out in the market. But as I mentioned, thankfully, didn't have that kind of issue, and we were able to sail through by giving a kind of a combination of or the KPIs being based upon the certain monetary measures or financial measures, not monetary, financial measures for us to be the KPIs. So these were the kind of teething problems we have faced. happy to have Akshay's thoughts on that because we have sailed together.
Yeah, Akshay, your point of view when they have given this, you have come out with the Yatra issue, what problem you have faced and how you have overcome this?
So as you say, whenever there is a company listed prior to you, it helps also. And if when you're first, that also helps. Both to have their own pros and cons. So here there was one Ease My Trip, which was already there listed before, and at least the offer document was out. So there was
Already
certain
listed.
benchmarks which you could compare to their company. So that definitely helped in terms of keeping it consistent with them to some extent. Oh, that's one aspect. But at the same time, when you have other players in your space, they might generally no two players are exactly comparable. So someone would have a strength in, say, booking in terms of train tickets, and say Yatra would have a strength in terms of flight tickets. So again, they're both the parameters for them would be different. And the investors try to, as Nitin said, that investors try to look at it from a common lens. So definitely this whole KPI concept now helps them to look at it from a common lens in terms of comparing different entities in the same sector. So that was there. But obviously getting numbers in terms of, because this as Sunil ji earlier said, that there's certain aspects of numbers coming from non-financial aspects, those become a challenge, because you would have migrated from Ind AS IGAP to Ind AS. So this becomes one major hurdle, that the numbers coming out are potentially, this happens in the retail industry more so than other industries, where the numbers which are coming are more IGAP numbers, which are for a KPI perspective, but numbers which you're putting in the offer document are Ind AS numbers. So this generally becomes one major concern.
Okay. Okay.
So just one point, if I can
Yeah.
make, just to add to what Akshay mentioned, I think in my view, as long as whatever data is actually being put out in terms of KPI, as long as that is really being authenticated by the numbers in the background and by a chartered accountant, like in this particular scenario, I
Right.
think that should still be a kind of a good case, irrespective of the kind of measure, be it operational or financial measure you use. I think that should still be kind of a good case.
Okay. Okay.
Right.
Bipinji, you have faced this type of problem when you have come out your issue when the KPI things has come. Okay, I think he is attending through a car. So now my second question. Yeah. So how do you decide which KPI to include? So Darpan and Akshay, have you faced this problem that because multiple things are there, you were loss-making company and you were having the non-financial information that prominently were something you have just now suggested, train ticket and IR ticket, comparability and other thing. But how do you decide which is the KPI which you have included?
So I think Akshay, can I go first?
Yes, absolutely. I was about to say, let the company go first.
Ah,
Company first.
Thank you. So, I would say that look, as opposed to, talking about that, how do you decide which KPIs you want to include? I would say that, look, for any KPI to be included, the primary criteria should be whether that indicator is providing some kind of trend or authenticity that you are able to gauge the performance of the company. If that is actually helping you out to see that whether the objectives of the companies are aligned in terms of that key indicator, to that extent, then that should be good. That'll be my thought process, as opposed to talking about that how you decide. Any indicator which is actually able to help the stakeholders of the company which are associated, be it the market or auditors or the board itself or other investors, if you're able to see through that these are the kind of indicators which are helping see the performance of the company over a period of time, that's a kind of a good criteria in my view.
Okay, Akshay, in the Yatra offer document, you have compared with the Make My Trip, you have compared the Ease My Travel, okay? And you have given the adjusted margin, adjusted EBITDA also, that is, I think very few companies are giving, okay?
Right.
So So how you have decided all these things to include?
No, so as rightly said by Darpan, the basic criteria is it showing some significance in terms of the overall growth and health of the company? So that's the fundamental parameter. And as Nitin said earlier, growth as well as current health, both the aspects are to be covered. So that was obviously the fundamental basis. Here we had three different lines of business. One was airline ticketing, one was hotel and packages, and then other services. So for every separate category, we had different parameters to be evaluated. Like whatever is there for airline is not necessarily relevant for your hotel packages also, because there you'll have your how many room nights were booked, versus in airlines it will be primarily like how many passengers were traveled. So over there it's all linked to room nights. Here it's all linked to how many passengers traveled. So these were the conceptual aspects when we were evaluating the different KPIs over there.
Okay, Bipin and Manoj, you want to say anything on this?
No, so I think Akshay and Darpan has clearly said, the decision making is based on the utility for the investors. It is this offer document is meant for the investor to decide the performance of the company and to make decision whether to invest or not. Hence, those parameters on the basis of which generally the management or the already existing investors are checking the performance of the company should be disclosed to the public also. So that is the parameter. So like in case of their case, the number of tickets getting booked for airlines should be separately disclosed, and the hotels room getting booked should be separately booked, because they will get different commissions, different income from these two verticals. So same maybe for different industries. What is the basis for others, like for hotel industry? Obviously the room occupancy in different seasons, or room rent per day, average room rent over the period of time, etc., may be relevant. So for each industry it will be different, and we have to judge based on what is relevant, which will be clearly measurable and can be continuously disclosed to the shareholders. So those parameters need to be checked while deciding, because there will be hundreds of information which may be given, but the pick and choose those key indicators, key facts which may help to decide the pricing or may decide the decision of investing. That should be the test, and based on that we decide the KPIs.
Okay. So Bipinji, when you come, please open your window and talk to us. So now, Darpan and Akshay, what makes a performance indicator key? Now there are so many information, multiple information. The issue which is challenged by the people, that either this is a principle base, that you have mentioned your principle, that we are seeing health and driver, which Nitin has also mentioned, and what is the health of the company, and which is the growth driver that you are doing. But the question is that in the market, one person is thinking market will go up, and one person is thinking on the same data market will go down. So two person cannot think on a same thing, and then multiple things are also. So I'm just asking, if there is no uniform practice, then how you are deciding, and which is the key indicator, performance indicator? So you will discuss and decide. So Akshay, I'm asking you first, that how this performance indicator is a key, which is a key out of multiple things you have mentioned, and you have handled so many issues. So how you are deciding this is a key information?
So I'll tell you, when you're drafting the business section, that is where the maximum things come up, that, okay, try to disclose this as a piece of information which definitely shows our strength over other companies' strength. So you try to capture in that aspect. This, while drafting the business section and having discussions with the company and with the management, that what do you track internally? What is one thing which gives the promoter sleepless nights, and what does, in retail industry, on an average, every promoter gets the SMS in the night time that this is today's consolidated sales across the country. Every promoter on the retail side gets this. So that is one thing which he is tracking on a daily basis. So when you do the drafting session of the business, you understand the business more in detail. That is where it all, via n number of discussions, it comes out that these are the following factors which the company is tracking, as well as this is something which is relevant from the investors, because we are over here more importantly looking from the investor's perspective also, that what is the investor trying to look at. So, and obviously if you have listed players and they have been listed for quite some time, they put up their annual or quarterly presentations, they tend to disclose certain numbers. So the investor community is expecting that at least these numbers should come out from a new company also, because for them it becomes easier to compare. So these are few things which for sure you have to cater to, as well as then something specific to the company where you can highlight that this is showing more strength of the company. You try to tend to disclose those data points also.
Okay, Darshan, in your case, when you were deciding, so what things you were thinking that this is a key point?
So, in our case, for us, I think it was comparatively easier, right? Because as I mentioned that, since we had already been there in the public domain already, so you were actually able to just focus on those kind of parameters only which were there in the public domain already, right? And since the market was receptive of these kind of information already, though it was in the US, the same kind of data and the same set of data was actually rolled out in our Indian, offer document as well. So from that perspective, we did not do much different from that perspective. Rather, it could have been called a kind of a constraint too, because we were to go the same way. We were actually just going with our US investors as well. Plus, just to add to that, I would think that if people are able to uh, consume the data in a easy manner and are able to see through that there is a competition which is around and are also presenting the same fashion, then I think it becomes a kind of a benchmark for anyone or any investor or a stakeholder automatically, right? So from that perspective, I think um, it's important that whatever is actually being put and kept out as a key performance indicators should be primarily used and broadly used in the open market by various other investors that will help drive or consume the data easily by any sort of investor.
Okay. So now, when you have decided that this is a key information you have identified, this is a health or this is a growth indicator. But when it's coming to the format and when you design this, have you faced any problem that uniformity of format was not there? Companies which has given earlier is totally different. Somebody is given peer comparison in a different manner. Because investor, if anything is very clear, a uniform system is there, then they can check. Otherwise, everybody is given the different format. We have done the research of 50 companies. Majority companies are giving format of their own choice, columns of their own choice, how they want to highlight. So if have you faced any problem and can you say that your presentation was the best?
So I think 2-3 questions out here. One, we would always want to say that look, whatever we are presenting with the full authenticity and with the fully substantiated data, it's going to be the best, right? Anyone would claim that. That's one. Second of all, so far as the peers are concerned, in our industry, in our competition, there was only one listed peer when we were just getting listed. So from that perspective, we were really comparable. I think that answers the other question. But this could be a larger problem for the other companies, though there will not be too many, when they are not able to see any sort of a peer that primarily or whose data primarily is in the open market. Because if there is no peer with the open market data around, then it becomes a difficult comparison for a company which is going to publicize the KPI for the first time. But thankfully, these were not so big issues, at least for us.
Okay. Akshay, one is the issue which I have asked Darpan, that is question. Do you think that the format which is prescribed by all companies, maybe you are following in all your companies in the same way, but others are not following? So do you suggest that anything, because I'll request all the dignitaries, those who are speaking, our purpose is not to the postmortem that what is good and what is bad. Our purpose is through you, we want to understand that what are the changes should be there so it can make life of issuer company, merchant banker, and investor easy. Okay, because what you are giving information, you are giving information to so investor can understand that what is the how they have arrived the price. If the investor is not understanding and you are also struggling, it means that information is not fulfilling the purpose for which they have asked. So Akshay, do you think the format which is there and which is presented by various companies, is it okay or it requires some changes?
So, if you are specifically the format, obviously everyone will keep on following their own format, and there will, in the probability of it being consistent will be relatively less. But what is more important is what is the kind of data which is being published, what is the quality of the data, and as we discussed earlier, what is the key performance indicator which you are disclosing. So format is fine. People can, because when you're giving data of the issuer company, you're also giving data of your peers to the extent available in the exactly same format. So when the reader is evaluating, say in our case, they were evaluating Yatra, they had exactly same numbers in the same format of Is My Trip and to the extent available of Make My Trip also. But there are certain data points which will not be available because you are looking at your business in a different method. Yatra is looking at per trip basis. Make My Trip is looking at a per segment basis, whether it is a break journey or a full journey or a return journey. EMT is looking in a third perspective. So this cannot be made consistent because everyone is doing and tracking their data points on their own individual basis. So just the format is, the output of whatever numbers out there. The question, real core question is that the data which is they are being put out, one, is it properly audited and validated? Assuming that's the case, because every merchant banker would like to, before putting his neck out, he'll want the numbers to be fully validated by the statutory auditor or the ICA. So that level of confidence is there that the numbers are correct. But whether they are absolutely comparable with the peer group, that will never happen.
Okay, okay. Now, Akshay and Bipinji, when you are there, you please open your window. How do you decide peer companies for showing comparison of KPI number one? What if there are no companies with similar business objective? I'm not asking question of Yatra only. You are handling so many other issues. So please give your experience on this. Akshay.
Yeah, sorry. So, obviously not just Yatra, all companies, your first question was that how do you identify your
The
peer set?
peer companies, and where there's no peer companies, and how you are selecting.
Right. So, there were a lot of situations where exact peer group is not comparable. We'd come out with in a segment of EMS segment where direct comparables were not there. This company was making into PCB chips, whereas there were no other company listed in that space. You had some distinct comparable in who are doing some electronic manufacturing on a contract basis. So obviously, you will try to peg it to some comparable where the business is relatively comparable, where the risk reward ratio is also somewhat comparable. Otherwise, and obviously that is one. Two is you'll try to see if they are of the same size and scale. Because if you pick up a company which is really small or which is really big and way outside your current issuer size, then that also has its own set of challenges because they operate on a different economies of scale. And if it is very small, then obviously they have not reached that level for comparison. So obviously sizing of the company has to be comparable and somewhat near to your business. You will
Okay.
never find exactly same, but you'll still find somewhat comparable. But there
So-
are situations where they're absolutely not comparable also.
So you have mentioned two important points. One is the the company comparable, and then size also.
Size.
That is also. Suppose if there are no companies similar in the business object, that how you are showing the data of that company, number one. Second is because there's no comparison, you can't show. So are you taking international company or are you taking an unlisted company? Something you are taking?
Right. So generally there is an attempt to do international comparison also. But when you're asking what are the challenges you face, generally with international companies, the challenges obviously IFRS to Ind AS, the differences are relatively less now over a period of time. But the bigger challenge is the 10 period which you are comparing. They will be following a calendar year as their financial year. We follow our normal financial year. So that direct comparison cannot happen because that generally remains one major problem. So you tend to stick to Indian companies only. Though in the industry overview section, you'll still put global peers and competitors, but in the basis for overview chapter, you'll still tend to stick to domestic companies. And over there, if you have no comparables, then it goes back to the basic concept of when drafting the business section, what were the key parameters when you are evaluating the business, when how the company is tracking business. So you will just put out your data points over there that these are the key parameters, and this is what we believe that you should also look at when you are investing and evaluating this company.
Okay. Okay. Darpan, any point you want to add in this?
Yes, one more point. I would think that, look, of course, the business arena is really getting shorter and smaller every other day. There has to be comparison with the international players also. But I think currently the SEBI regulations would not allow any of those to be mentioned in the prospectus of a listed Indian entity, right? Because they say, look, show me a comparison or a peer which is there in the Indian market. Otherwise, they will not allow. You might be mentioning in the some other section of the prospectus, but not in this basis or issue price. So that could be kind of another constraint here.
Okay. Okay. Manoj, you have any point in this?
Yeah, I think Akshay has rightly said that we have to judge based on the company, and if we are using the comparable company, it may not be exactly the same industry under the same industry. Broadly, there should be similar kind of business model, and then size should be relevant. If it is extraordinarily high or low in the financial numbers, then it may not be relevant to disclose or compare with. So that is for the companies for which we have the comparable peers. But for those we don't have the comparables, then we should look at the financial parameters on the basis of which the performance is judged by the management, and that is disclosed with saying that even investors should look at those numbers to judge the performance of the company. So that is the basis, that is the thesis on the basis of which disclosure is made.
Okay. Now, which KPI? Now the Akshay and Darpan, there's a very interesting point. Now and Akshay, you have to more focus on this. Now there are so many companies which are taking P investment, and when P investor or any other investor is coming, they are asking various information when you are unlisted, because they are getting, and because they are investing money when there is no exit route that particular time. You have a future exit route, so his money will be blocked if there is no successful exit, or if they are not clear about the company. So they ask various information.
Right.
Now these information are including competitive information, competitors information also, or USP also company, which normally company are not giving to any other person because you signed NDA with them.
Right.
So what do you feel? The information given to PE is also should also be part of the KPI, or that should be excluded?
So the current regulations so clearly state that whatever the information you have given to the investors in the last 3 years, that has to be included as part of KPI. Because SEBI also understands, the way you said, SEBI also understands that the PE funds who are investing in an unlisted company, their level of diligence is very high. They track the business not just from a financial numbers perspective, but from a holistic perspective, that what actually and how actually the company is performing. So basis that information is required and it is relevant to be included in the offer document. And anyway, it's a regulatory aspect to be included. So whether it's a right move, I would say yes, definitely yes. Because
Okay,
they
now
capture the correct parameters.
Okay, now, but companies are claiming and going to SEBI and asking them that this is my USP, this is my information I don't want to give because the competitor will know. So what do you say, Darpan?
I think there could be two viewpoints around this. One, what information is really being talked about here. If this is going to be a kind of a key performance indicator indeed, then as Akshay has rightly mentioned, that this becomes a norm or this becomes a mandate from the SEBI side that it is required to be mentioned. You can't really be put other investors which were yet to come at a different footing from the investors who are already sitting in the company. But so far as other information is concerned, which is your trademark sort of a thing, like that, look, this is my IP. If I actually end up disclosing that information in the market, I'm playing with an exposure, or rather, I'm taking an exposure of pulling out or putting out my trade secrets in the public domain. To that extent, that could be saved, and I don't think that any regulator will also really insist upon that. But if that indicator is going to indicate the progress and development of a company or a business as a journey, I think that should still be okay to be put out, so that the investors who are yet to come are not unduly put on a kind of a lesser information as opposed to anyone who is already existing in the company through as a PE or any other sort of a close investor.
Okay, Manoj, your view that P information, the law is clear, but companies are saying and they are not giving also. So what do you feel on this?
Sir, so the concept is very much clear. Though present law, as Darpan and Akshay was saying, it is clearly mentioned that all those information which have been shared with investors during last 3 years, all those key parameters must also be disclosed to the public at large, because they are also going to be the investors. So there should not be asymmetry of information among the two set of investors. So that conceptually it is very correct. Besides that, the concept is very much clear. If certain information would help in decision making, in the price as well as investment decision of the investor, then those parameters must be disclosed. So if you are saying that investors who are already there knowing something or being disclosed something, and it will not be disclosed to the public, it is not a right approach. And the company which is going to be listed, which is raising fund from the public, should disclose those information. With respect to the confidentiality part or competitor knowing those information, I think post IPO those disclosure will anyway come. So and keeping in view the chances of issue not getting success, I think SEBI has already brought the concept of confidential filing of offer document. Till the time SEBI clears the offer document, it remains confidential, and only post clearance by the SEBI, the information is made public for 30 days for public comment. So that protection is already there. So in considering these facts, I don't think this claim would survive, that they will not like to give those information which they have already given to the PE investors or existing investors.
Okay. So one last question to Darpan and Akshay from my side, that what should be the negative KPI so companies should not give? With your experience, you please tell when you have finalized, or Akshay, you are continuously finalizing some information which you think is should not be given, which should be a part. So there are two questions. One is, what is the information in negative KPI? Negative KPI mean it's irrelevant. Second is, how to make this that they should not disclose this.
So if I understand that correctly, I would think that, look, if there happens to be any sort of a KPI which is negative, so what we mean here is that there is an indicator which is bringing back or which is indicating a kind of a downside kind of a trajectory of a company, correct? Is that the question, correct? So I don't think that becomes a kind of a relevant point at all, because whenever you are actually hitting the market, you always want to show your USP, that this is the kind of a thing I'm going to build upon. I don't think that anyone would actually go to the market and would classify that negative trajectory to be showing as this is my performance indicator. Then this can't be a performance that I'll say that, look, this is something which is a trend, but not your business progression at all. I'm not sure that how would a business go and show that this is a kind of a negative trajectory, but still this remains my USP. I don't think this is even required to be disclosed unless the law mandates that. In my view, this is the current understanding, that you are not compelled to do that.
Okay. Okay.
And
Yeah.
no
I
one
think,
will
I
actually,
think, sir, you
So,
were discussing relating to negative list of KPIs or information which may not be and should not be allowed to be disclosed. Like so, it, for that, I think law is very much clear. If it is not measurable, if it cannot be certified, it may be misleading. Then these KPIs these cannot be considered to be a KPI and disclosed in the
exactly.
offer.
So that means as long as you are not able to substantiate something with the data,
Yes.
which is
Yes.
not verifiable, that might not classify as a KPI at all.
KPI at all. Yes.
Yeah,
Okay. Okay.
that
Okay.
helps. That helps.
Okay. Your view.
All right. And to what Darpan said on the concept of if that number or that trend is continuously negative and you're showing that as a USP, then there's a different problem in the whole IPO itself.
Yes,
I put it that way.
That may
Okay.
be a risk factor, not the KPI, obviously.
KPI, correct, correct.
Or
Okay.
and if it is that fundamental, then it's a conceptual question that should this company go public?
Right.
And are you on the right track in terms of taking this company public if its fundamentals are going down?
Okay. 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 So now I will just put the issuer and merchant banker. They can just take rest. Ruchika, you want to say anything on the entire issue?
Yes, sir. So, apologies for my not opening the video. I'm traveling. So, KPIs basically are the indicators which everyone has mentioned, but I want to specifically say upon the issues which companies face when there is no domestic peer to compare and to indicate the indicators, KPIs, and in cases where the companies are loss making. So I think in loss making companies, the indicators may be the scale of business or the range of business pursuant to which you can indicate that how the company's performance gonna be. It might not be the financial parameters. And in cases of startups or new technologies companies where there are or unique businesses companies where there are no domestic peers to compare, then SEBI has also recommended in their earlier press note of 2022 that even global peers can also be taken, and the certain financial parameters which can be compared to those global peers should be considered for indicating the parameters.
Okay. Okay. Now, Nitin, you are a mutual fund investor. You are in a mutual fund, and you are investing continuously in various companies. So you are investing in IPO-based companies also, and then when you are doing research on picking up any company in a secondary sale, then also you see the KPI and other thing also. So what you look in KPI? My 2-3 things are there in this. Do you think that SEBI has prescribed something merchant banker issuer company is giving? Are you saying that first of all, what you are considering KPI? Second, are your point which you on the basis of you are considering they are disclosing? You are very nicely covered health of the company and the growth driver. Okay. So my two questions: one is what you see, and whether these things, whether the information prescribed by the law is fulfilled as per you.
Got it. Rightfully, the question should be in that way, how do we monitor it or what are we monitoring? So for us, the periodic result updates and KPI disclosures along them, it becomes a key checkpoint for us to help understand the evolution of the company once it gets listed. Just to sit back and look along the whole situation as an investor, we do appreciate that when companies come for listing, they do share relevant information, KPI metrics, and at times post listing, they do start showing certain degree of apprehension in terms of sharing that same detailed information to the investors. uh, Stopping to share those information very early, it does give some kind of impression that company is failing to keep moving in that direction through those metrics which they thought is the way to evaluate that company or its progress. uh, and we strongly believe KPI continuation or disclosure is very important, or is also being seen as an MI strength of the company, because when you start investing in company, they could be small in size or at the nascent stage, and as they evolve, their MIS strength keeps improving. And those KPI metrics which they've been showing when their MIS strength may be at the evolving stage, they become much more easier to monitor and start keeping a track of it when they become bigger. However, to put a context to it, there can be certain degree of KPIs which are certainly competitive in nature, which a company wants to retain with itself after a certain degree of time. We do appreciate that. Uh, but how do you decipher between two companies? When there is a traditional company, let's say example, a manufacturing company which is coming for listing, is planning to raise and money for a mega plant which it wants to invest in. How do you track that company or KPI for the company once it gets listed? Definitely for you, the thumb rule is, uh, once the plant has been installed, the cost will hit the P&L first, and then the revenue will start generating. So what you want to monitor is company making enough gross margin or spread to absorb those fixed costs once the plant gets listed. On similar fashion, we also tend to look at with the new age business. Let's say new age business, and elongate that whole process. What we discussed in the first example of a company which is trying to set up a plant, that plant can get installed over a period of 1 year or probably 3 years. In a new age business which is still evolving, there the probably the business may stabilize over a period of 1 year, 2 year, 5 year. Very difficult to predict right away, because it's still a new age business, where the costs are uploaded or front loaded in terms of technology, or in terms of cost of onboarding the customer through new way of delivering the services which otherwise earlier have been delivered in a different way. Now, way to monitor those KPI for a new age business at that stage would be, how frequently a customer is coming on that portal, or how much time it is spending on that portal or app. What is the frequency of that customer visiting that particular page, or how much transaction he is doing. Once you start adding or start multiplying those factors, let's say for example a customer has spent 1,000 rupee when he comes first time, and this becomes a consistent pattern, and he's coming thrice in a month. So effectively he is coming 36 times in a year, which means he's spending 36,000 in a year. And then you keep a track of how many customers they are able to onboard, and what is the fixed cost of onboarding, which will not grow in future. If that becomes you know the metrics, then the PNL can be constructed in your mind, and then you can easily understand how the operational cash flow will play out, how the profit metrics will play out. So having stopping those disclosure early in life will kill the whole metrics through which an investor would want to measure the company. And then you'll end up asking the management, give us the guidance, which I believe is not the right way of investing. So those KPIs, once they uh, somewhere in our discussion we did touch upon a point, when an angel investor or a PE investor is onboarded, a lot of information gets shared with them, because they are taking a lot of risk and they want to see how business is evolving. But same is true for a company which is getting listed and still not making profit. Even the secondary market investor are taking an equal degree of risk, because an investment can go zero for a P investor, and same investment can go zero for a secondary investor. So those key performance indicators need to be shared to an extent the company stabilizes its operation in terms of either efficiencies which are easy to monitor its path to profit, or else once it starts demonstrating good profitability.
Okay. How do you evaluate key performance indicator when different industry having varying practice of presenting them? Because you have your
Right.
own research team, you are also having
Right.
important data. Sometime you must be seeing that also, that information which company is giving is irrelevant, or it is not showing the complete picture. So what is your view on this?
Right. Many times, a lot of data which companies share, they are relevant. And in a way, the KPI becomes the mouthpiece for a company to talk about their progress or their characteristics through a data point. Uh, and as an investor, the way we monitor KPI for different companies, the thumb rule has to be what is the capital efficiency and what are the metrics indicating on growth. So let's say, for example, if it's a traditional company or a sector like FMCG, then the life is very easy because here you monitor volume, you monitor gross profit margin, you monitor cash flow to EBITDA, what kind of cash flow is getting generated on the EBITDA, and then the ROE. Life is very simple because the FMCG companies are typically not heavy on balance sheet. But when it comes to bank, you want to start with the balance sheet. The focus starts from the balance sheet because here you want to see, is the bank in a position where the NPAs are ballooning? Are the ROE relevant, good enough so that bank can replow the returns and keep growing at a steady pace? Are they taking adequate leverage or over leverage, which can backfire? Are their NIMs good enough? So those are the metrics we typically monitor for banks. Uh, when we talk about new age business, the metrics again become different, where we typically use words like flywheel effect, wherein you are talking about multiple levers working in small tandem, but the objective of those levers is to run the whole ship forward. So the small levers could be what is the unit metrics. Let's say, for example, a product has been sold. First of all, is that product sold with profit? Because many times they'll end up giving so much discount that they'll end up selling product at a negative profit. So we want to understand first, are the unit metrics right for a product that they're selling? Second, then you go back to business metrics, where you say that, okay, the unit metrics is right, but the business, let's say, for example, they have incurred X amount of cost for running that fashion business or apparel business or food business. So the investment which they've done to run that business, is it getting covered with the profit that particular unit metrics is going to generate, or the profit that unit metrics is going to generate over a period of time? And then third lever, which is the corporate expense, are they getting covered through 2-3 business units which they are investing on regular basis? So we have to keep building on those flywheel effect, to understand the profit pool which it can generate over a period of time to absorb unit level cost, then the business unit level cost, and the third is corporate level cost. So different business, different approach. The most difficult is the new age business because here the whole system starts with front loading of cost and then hoping that it will help you to recover it to the flywheel effect of its revenue.
Okay. So you have nicely covered, Nitin. Now, there are some questions we have received. I'm just covering. One is suggestion, sir. You can consider master circular on ICDR along with KPI that we will tell SEBI. Now, 2 valuation reports in case of IPO. One from RV for Companies Act 2013. Second from the merchant banker for SEBI purpose. Which value taken in IPO pricing deciding? Manoj and
Sir, for IPO, there is no valuation requirement. Neither the registered valuer values company for IPO nor the merchant banker. No valuation report or mention a reference to any valuation is given in the offer document. The price is disclosed or price band is disclosed along with the KPIs as being discussed here. And based on that, it is investors who should decide whether the issue is fairly priced, it is unfair or exceptionally high priced or discounted price. That is the total prerogative of the investor and not the merchant banker of the issuer company.
Okay. As regard IPO of the life insurance company, which has been experienced as a complex one as compared to other companies, where entire surplus income less expenses belong to the shareholders. Non-financial KPIs like persistency ratio seems more important before regulator lays down industry-specific such KPIs instead of leaving disclosure thereof at discretion of the issuer company. Thought of the speaker on this aspects. So if I can understand his point, what he's suggesting that every company has a different thing, different. If you leave it on the company, then they will give information. So it is better that regulator should give them a guidance on this. So what do you feel?
So, saying that the regulator should prescribe the KPIs for companies, all the industries, it is very difficult for SEBI or any other regulator to decide. Obviously, whatever is established principle for any particular industry or sector would be disclosed, and the merchant banker and the company would take care of the same. So I don't think it is possible for any regulator to decide and define what should be the KPI for each and every industry. There may be hundreds of industry, or within the industry, there may be hundreds of business models. So for each business model, there may be different KPIs to decide. So I don't think it is
Akshay,
possible.
what is your view?
Right. Further, as the question is asked that as regards persistency ratio, now this is specific to the insurance company, to all insurance companies, and the calculation of that is also again defined by IRDAI, the regulator over there for that specific industry. Other than few, say for banking, there is RBI, for insurance, there is IRDAI. All others don't have any specific regulator.
Yeah.
For mutual fund, again, there is SEBI, but for all others, there are no specific regulator. So, and SEBI can't go and, because if SEBI starts telling that you disclose this, then it will become a situation that SEBI is over-regulating. And it is not giving freedom to the issuer to decide what is good for its business or no, or for the investor to say what is looking right or no. So obviously, this is absolutely not possible, except for few industries which are governed by a central regulator.
Nitin, you have a view on this?
No, I agree. Different companies will have different set of KPIs, and at times it's important to also understand the KPI helps to understand the health of the company. Like in this case, if I were to pick up on a point on persistent ratio, it does talk about the number of policy holders who are renewing their premium. Now, if let's say, for example, a company has incurred 1,000 rupees to onboard a customer, and he pays premium for the first year but doesn't want to renew next year, and the company's profit on that first premium is barely 500, then effectively company is making loss of 500 rupees while onboarding the customer. But if that same customer renews, which is what we call as persistent ratio, then the company's profitability gets strengthened because he is now no more required to again invest 1,000 rupee to onboard or retain that same customer. So there are certain metrics which are more better in nature to understand the health of the company. Same is like combined ratio and all. But I agree with the other participants on the forum, who did indicate, every sector or company will have a different set of KPI, especially insurance being a much more complicated, because here the costs are again uploaded first, and the premium amount or the retainership happens over a period of time where the profit gets pulled up over a period of time. So it's slightly difficult, and I agree with you. The nuances are different here.
Okay. But if we can divide company into two parts, one is the traditional company, which are normal, and one is the new age company. So in the new age company, certain informations are available. In the traditional company, certain. So can we make that industry specific? They can give example of few companies, the rest they should work out. Okay. Now, if they can make some uniformity, some suggestion they can give, these are the information you must give, rest it is on your choice. So it will not help to make a uniform process. So companies will not leave. Today, what is happening? 100 things are required. You are giving 200 things, but in the which is required, you are leaving and only 50 things you are giving. I'm just giving an example. So in a way, if SEBI is saying these 100 things you have to give, remaining things it is your choice. So people will not leave that, and they have to give, and that is on the basis of uh, on the test. So do you think that it will help, Nitin?
Pawanji, while you were drafting the question, a thing came to my mind. Let us say there are two people. One is a patient, and other one is a normal individual.
Yeah.
To check the health of a normal individual, CBC report itself could be good enough. But to check health of a patient who is in the hospital, there will be multiple tests which will be required.
Yeah.
So same example can be extrapolated to the health of the or the financials of the company. If the company's financials are well established and there is a consistent track record, a normal trend analysis itself is good enough to take a conclusion on how the company is faring. But if that same company is yet to report profitability, new age business where the costs are high, or is going through a tough time, the disclosures on KPI has to go up, and that is how investor will understand that okay, once things were to improve on A, B, C, D, then effectively profit pool or the earnings will start to emerge. So the confidence needs to be provided to the investor. What are those A, B, C, D through which company will arrive to the profit pool once the time normalizes?
Okay, Akshay, do you think that the point I'm suggesting or the KPI should be on principle based? So if the principle is there, because today the point has come that these are the health of the company and these are the growth parameter of the company. But in KPI, this is not mentioned. So do you think that the SEBI should come out the principle based guideline, on that basis company should follow? What is your view, Akshay?
So conceptually, SEBI as of now has already said that what you feel is appropriate and correct, please disclose it. So they have left that entire discretion and choice to the banker and the issuer company in terms of what you feel is appropriate, please disclose that. What you can disclose consistently, try to disclose that. Because as Nitin said that, if it is not disclosed consistently, they are the first affected party over there, negatively affected party over there. So obviously consistency of disclosure and your ability to disclose it. 3 is, does it really make sense? End of it, all of this, whatever KPIs, you can give 50 KPIs, but if they don't make sense for the reader, it's or to help his investment decision, then it's of no use. So SEBI is given that broad mandate that whatever is logical and relevant and helps the investor to take a call, you disclose that. So that mandate is already there. So
Manoj? Yeah. Somebody was. Yeah, Darpan.
One point, I think just in addition to what Akshay and Nitin have already mentioned, I think the consistency is very important. Plus, if the information has been available and can be disclosed on a trend basis from a historical perspective, also that also makes a point, because if you're saying that, look, I will start indicating about my performance of the company on an X parameter from tomorrow, but historically there has been nothing available. I think that could be a superficial thing in my view. You should be actually thinking that, look, if you have been running company for last 15 years, then there will be historical trends around that. So historical trends coupled with the consistency so that the future could also hold upon that, I think makes the point for determining any sort of a KPI in my view.
Okay.
Yeah.
Now, one question has come: is there a direct relationship between different KPIs, financial, non-financial, of a company and the price band if quoted during the IPO? How does the investor know that whether the price band is reasonable or not? Akshay?
conceptually, the way entire valuation discussion moves around is in relation to where your peers are where your peer multiples are, the P multiple, the E by EBITDA multiple, where do you stand? Where does your peer stand in that? And so that's the basic benchmark. And then now you adjust it for your KPIs and their KPIs, whether your certain parameters are better than their parameters, that you are asking for certain premium, or you're asking for certain discount vis-a-vis the listed companies' numbers. So generally that's the trend, and that's the basic ask of everyone. That's how it works.
Okay. So one question, Mr. BK Unhelkar is again asking who was asked question of insurance. He's saying, thanks for the thought of the speaker. In fact, many financial KPIs of life insurance company like embedded value, BNB margins, etc., have more actuarial angle than accounting one. In my earlier question, I meant respective regulator, not SEBI. In fact, IRDI, in the issue of shares regulation, have left all aspects of a DRHP to SEBI only, except approval of them first on the basis of embedded value before applying SEBI for IPO as per the ICDR. What he is saying? He's saying the regulator, the specific sector regulator, should also come out with the KPI things.
I think that question was also answered by Akshay, that there is only a few industries which are directly regulated by some regulator, like insurance or maybe banking, but there is no other industry which is regulated and which has any direct regulator. So it will be very difficult if this task is left to those regulators. Only I think 2-3 sectors would get this indication. Rest of the company remain out of that.
And actually, for all these regulators, be it insurance companies or be it banks, on an average, if you see, all of them give almost the same kind of disclosures, because you have enough listed companies also out there, be it
Yes.
the banking sector or the insurance sector, and there are new companies also coming which are on the same line. So they tend to follow the same kind of disclosures over there.
Yes.
So it's
So
not
by
actually that
practice
data
it
is
happens. Yes.
disclosed.
By practice it happens, whether or
Yeah.
not the regulator has prescribed it.
Yes.
Okay, my last question to all, and then we can close the session. Do you think the way things are moving, because we have done one research, and what we have done, we have divided company into 4 parts. One is the traditional profit making, traditional non-profit making, new age company profit making, new age company non-profit making. And then we compare all the companies since last 1.5 year, issues have come. And then we have taken out that what they have disclosed in the financial metrics, and then in the ratio, and then the non-financial, and then in the non-financial industry-wise. I found that companies are not uniform, number one. They are not giving uniform information. Every company is giving different information, and the list is becoming 100 in place of 25, which is the relevant thing which you people are saying. Now the question is, as a issuer like Darpan, as a investor like Nitin, or as Akshay or Manoj, when you are deciding any issue, then the question comes of what I should give and what I should not give. Now, in the process, what is happening, when you are giving multiple information, your KPI page is becoming 4, 5, 6, 7, 8, 9, 10 pages. But investor is nothing. No, for investor to identify the health of the company, to identify the non-financial information, it is the same. Now, if I am going to the various sites which are giving research data, they are also giving a ratio. They are giving growth kya hua. They are giving what is it. I can read this. This KPI should be like one document. Like, I'll give you an example. Earlier, chartered accountants were giving certificates of audit, and they were in the annual report, they were putting audit certificate. that we have done the valuation of auditing of this company, and this is our comments. Now, earlier, what was happening, there was no format. So all the qualifying things you can find from page number 1 to page number 20, where they are giving reports, a 20-page report they have given. They will mix. Now, Ministry of Corporate Affairs came out and they sell. In the last column, you have to write all the qualifying statement in a uniform, in a italic form. So today I'm not required to see the balance sheet or director, the auditor report, all pages. I will go to the last page, see how many qualifications they have given. Okay. So it has helped everyone. One is you are not hiding. Sometimes company pressurizing auditor, अरे भाई छुपा लो, इसको हटा दो, इसको यहाँ डाल दो, इसको ये कर दो. So you can say I have disclosed, but it is not disclosed properly. So now they have to give in this. So I'm asking this question: can we do one thing, that we identified that this is the health of the company and this is the growth driver of the company's data. These are the information which they have to give, must give information, and rest you leave it to the company to give. It will not help to create a good point that all companies are comparing what the information they are asking, that this is must information you have to follow. Suppose it is not applicable to you by any chance, that data is not, because you are in some industry which is new one and there's no comparable. Will it not help that if we follow uniform things? Anybody can start. Akshay.
Yeah, so luckily, of late, what has happened is on the financial parameter side, ICAI has come out with a guidance note in terms of how to calculate ratios. At least that has become uniform as of now. Earlier,
Okay.
even say for the simple definition of EBITDA, people will have 4 different definitions of EBITDA.
Yeah.
And from a SEBI perspective, you've given the answer of your EBITDA with a star stating that this is my definition. Now, some other company will give a different definition and will use the same terminology, but ICI in its guidance note of ratios has now made all of this consistent. So what you're saying on the financial parameters, you can fix them, that all of them come on the same page. But the moment you come to operational data or non-financial parameters, it would be really tough, because then it goes into the same zone of either over-regulation by SEBI, or it will go into a zone of that which regulator will give this kind of disclosure.
Akshay, I will tell you, we have done the research on when we have taken out the ratios and various financial parameters. We found that what CA Institute has prescribed, that they are giving only 10 to 20, 30%. 70% they are giving new information, like adjusted EBITDA. Now this adjusted EBITDA, what is there? People are giving EBITDA. There is so many new terminology people have created that this is our terminology,
Right.
and there is no definition available. So if definition is not available, one company is doing, another company is following the different way. They are doing this. So there is a need of uniformity. Nitin, what is your view?
No, I agree with you. There is a need of uniformity. I think this problem used to exist a lot between 2021 to 22, where a lot of new age companies were getting listed for the first time after a long break, and that's where as an investor, the investors were also excited, and as a PE guys or as a promoter of those companies, they were more concerned about what needs to be disclosed and what not. So there was a phase where information were not consistent, but incrementally, I agree with you, Pavanji, that information, the way Akshay also defined it, the incremental data points that we are seeing, the name or the word like adjusted EBITDA is reducing. But yeah, on the KPI front, I think uh, what needs to be communicated to the company, start disclosing data, and they can use their own way of sharing those data in terms of breaking down their revenue in terms of volume or units and pricing, so that you get a driver understanding of those revenue. And when it comes to cost, A lot of companies are at the cusp of investing to attract customers or investing to add capacities. So if there is a consistent way of showing, how the ad spends are shaping up for those businesses across the peer sets and them, or how they are investing, let's say for per bed of room in hotel industry or per bed of capex for hospital industry, those kind of metrics, then investor is able to take a more informed view or a call while deciding to invest in those kind of sector or companies.
Okay. Now, last, we have to close this session. So, as a ritual, we are asking, we are giving 35 seconds to everybody, that now you please suggest what changes should we bring. So, it will be a good parameter to decide the price. I'll start with Akshay, then Darpan, then Manoj. Yeah, please, Akshay.
In fact, one Mr. K. Unalekar has asked this question, so I'll just take 5 seconds. That if a new IPO company started to give some new data point, then should SEBI make this mandatory for other companies also going forward? Yes, absolutely. This is a trend which is not written in law, but this is actually being practiced on the ground. That SEBI will do their homework. They will come back to you stating that, these are the parameters used by other listed players. Why are you not using it? That time, it's a tough situation to answer that, sorry, we didn't give this data, we forgot, or we didn't like it, or whatever. So this is becoming a trend that please ensure whatever your peers have done in the past, you have already covered all of those. So definitely, yes, it's going down that route itself.
Okay, any other suggestion for improvement of this?
There is already so much of information overload that if you keep on adding more to it, you said that 15-20% is covered, 70% is uncovered. You add 50% to it, from a investment banker's perspective, it's like more of risk management. Might as well give out more data rather than the regulator coming back or the investor coming back and saying that this data is not there. So you always try to be on the safer side and give more data. So
Okay.
that's where it is.
Okay, Nitin.
To an extent, I agree with Akshay. There is enough information now available versus 8-10 years back when the IPO used to come. The only way to analyze and compare was the PE ratios which are available. The KPIs were not there. With KPIs coming in, the life has become easier for investors to at least compare company A soul of a company of A versus the soul of company of B and C. Otherwise, it was only P metrics that you used to see while comparing and evaluating, and then concluding that okay, this could be the price band, which is what company is suggesting is justifiable or not. Now we have much more data of character of the company in terms of KPI to define versus A, B, and C, and then look at the P and then close it.
Okay, Darpan.
So my take on this is that look, the data around the KPIs should actually be standardized. There could also be a option, which could be given by SEBI, that in case you are falling in a category that where the KPIs are standardized, which is relevant and standardized for everyone. If you really want to just add some more KPIs beyond that, that is discretionary. You can do it on your own, but with the condition that you will keep disclosing it in one way or the other for next 3 years. So that people are not saying that look, I've disclosed it only for the sake of IPO or for the primary market, and thereafter I've really forgotten. That's my take on that. And plus one more point, I think there is a requirement of keep disclosing this KPI for next 1 year. I think there could be a room for more clarity that where and how it should be actually disclosed. Because it's just leaving by saying that, look, you have to disclose. I don't think it's really very clearly stating out that where these are required to be disclosed and how.
Okay.
Yeah.
Manoj.
Yeah, so standardization is always good. It helps to compare and see the data. However, over the standardization sometimes also kills the need. So we have to balance it out. Wherever it is possible, there should be similar format, similar disclosure pattern, and obviously definitions are of all the ratios, etc. is already there. So there is a clarity with respect to quantitative data. For non-quantitative also, if possible, some standardization may be there, but over standardization may not be possible and is not suggestible. I think.
Okay. Thank you very much. I think we got the views of everybody, and thanks all participants, Darpan, Akshay, Nitin, Vipin Agarwal ji, and Sanjeev Singhal, Manoj, Ruchika. Thank you very much. So 6 o'clock is there, and 4 to 6 our program. So dot we are closing. Just thank you very much, all participants and all panelists. And as I am just informing, the next webinar will be on the value creation through demerger and hiving off on the next Friday at 4 o'clock, 4 to 6. Till then,